About that. They were looking at potentially a $14 billion fine for their role or the alleged role in mortgage-backed securities and all these fancy schmancy derivatives that they were helping to market. The fact of the matter is, if it's paired by 2/3, then other banks are going to start wondering, well, wait a minute, you pair settlements for us, or do you play this same sort of a soap opera? You know, say you're in great duress, and that if governments get too tough on you, you might go belly up. Someone brought someone to the table here. Charles Payne, Jonas, Ferris, Fortune Magazine's Nina Easton. Nina, what do you think of that?
Well, I think we're to some extent seeing a lot of the arguments that we saw back in 2008, of course, and have played out. Are these institutions too big to fail? You know, I think that we've learned a lot, though, since 2008. U.S. banks are better capitalized. There's more of a sense that this could become a global contagion if it's not taken care of right away. It is, of course, playing out right on the eve of the election, and we can talk about that and how it's going to impact the candidates.
All right, I do want to talk about that, but Charles Payne, this notion that it has a Lehman Brothers feel to it, to avoid a Lehman Brothers disaster, something 8 years ago that was, you know, everywhere. What do you think?
Well, as Nina pointed out, the banking system is a lot stronger than it was back then. It was obviously a much bigger ticking time bomb.
Now, when you say stronger, the both of you say
capital
stronger.
ratios.
No, they have more cash on hand in case everything hits the fan.
Right, right. Now also,
but you can bleed cash fast in a market sell-off.
Well, yeah, it's not the market sell-off, though. It's, I mean, we already had an explosion. It's, you know, it's
right.
like sort of saying, you know, okay, the volcano erupted, now there's half a volcano left. Well, the other half erupts, it won't be the same as the previous.
But here's why I keep pounding that notion. The capital of a lot of these banks, not figured into the equation, the value of their stock, right? So if that plummets, not that it's happened, right. Isn't that part of the equation we don't appreciate?
It is part, but they also have to have more actual assets other than stock. And you know, I will say, if you want to go down that path, though, this week, which was very underreported, is the Federal Reserve is beefing up their stress tests. And that's something to keep an eye on.
Why are they doing that?
Right. Again, that's a big question. Why would they be doing that now? And it's very quiet, but they you know, you got to go to their website and monitor it all the time. But having said that, too, Neil, I'm also a critic of these. It's 8-7 years later. The government's pounding these banks for more and more money. Where did the $14 billion number come from? I mean, that was an arbitrary number pulled out of left field. The valuation of the stock is $14 billion. Yeah, so there are two sides to this. And as far as politics are concerned, yesterday Hillary Clinton said her favorite politician was Angela Merkel. Would President Obama throw her under the bus, Angela Merkel, on the eve of the U.S. election by allowing Germany's biggest bank to go under or face even more duress? So there's so many parts to this story.
I thought the Angela Merkel thing was interesting because she leads a conservative government, but that's a whole other issue. Jonas, on that and how big a deal this could be, I don't like the reasons for the rally. We all love a rally if you're long the market, but I don't like the reasons behind this.
No. A rally based on central banks having to do something to keep a bank propped up
or Justice Department curtailing fines to keep it propped up.
Especially one with the underlying earnings declining in the United States on stocks. That said, I don't think we're getting a rally on bailout rumors explicitly, the kind that we recall from 2008, where they're just handing out money to banks. If it's a bailout, it would be a political indirect bailout where someone's making a phone call that you've got to move the decimal point on this fine because this bank can't afford that. Because it begs the question, if they can't afford the fine, maybe the crime wasn't that lucrative in the first place. Because Wells Fargo could pay this and it would hurt their stock price about 50 cents. This bank
they could open up bogus accounts.
Well, because they make a lot of money and their underlying portfolio of houses have all gone up over the last 8 years. In Europe, this bank is not well capitalized and they have deflation problems, which means the assets backing loans are not doing as well as Wells Fargo's. So this bank can't just write a $16 billion check. And as far as all these banks in general, not this one, are better capitalized, there's no bank that can handle a panic. Okay, the banking business is leveraged. I don't care what the Fed, what the rules are. If you get people scared, and this isn't a retail bank with a lot of branches where people just run, but if you get hedge funds like we see and people who don't want them as a counterparty, the bank's going to collapse without someone stepping in. And unfortunately, the conservative point you made, they don't want to bail it out. Because if they bail out this bank, then Italy banks want to bail out those banks, and the Greek banks want to get bailed out. So they really don't want to do a bank run. 10 euro stock price isn't going to cause a bailout. This thing has to go under for there to be a bailout.
So. But you know, Nina, what we were talking about here, whether it's banks here or abroad, they're joined at the hip in this sense that, for example, when it comes to their central banks, easy money beats tough money. Low rates, the way they are, beats those rates going up. And every time there's even the hint from a Fed governor, district president, whatever, that they might go up sooner than the market thought, the market panics. And that tells me that if they had their druthers, rates would never go up. All these central banks would never get tough when it comes to inflation. And that worries me as well.
Well, that worries a lot of people, Neil. But, in fairness to our banking system, the banks, and not to be a complete defender of everything our banks are doing, but our banking system, the U.S. banking system, went through stress test, went through raising capital, went through a real kind of cleansing of the system that the European banks, frankly, were late on doing. And I think to some extent you're seeing it play out now. So, I think your concerns are well taken, but so is the concern of setting off a worldwide financial contagion once again.
Yeah.
And
I don't want to be a crepe hanger.
I think that's how the central banks are reacting.
No,
yeah.
and I agree with you. I don't want to be a crepe hanger, and I don't want to be an alarmist here. Maybe it's the season, Charles. Maybe it's another presidential election. Maybe it's an institution in trouble that's bringing my memory back here. But I want to get a sense from you about the overall economy worldwide. Right. Because normally developments like this hint of problems. Or they could be one-shot aberrations. What are they to you?
Well, America is still probably the best developed economy in the world. We're starting to get some traction. It's not saying much, but to Nina's point, Europe is in a lot of trouble. That's why the British exit vote was certainly important. And to me, it wasn't even about the immigration thing as much as the UK separating itself in a lot of ways, because the European Union has been an unmitigated disaster. And now they find themselves with a bunch of large banks that have a whole bunch of toxic assets, aging population, and no real way to spark the economy outside of Germany, which has some great products that people pay a premium for. So, you separate the United States from that. Today, Costco is soaring. I'm sure if I go to Costco this weekend, I'll wait in line for 20 minutes to pay for my $500 to $1,000 worth of stuff. So we're a little bit separated from the rest of the world, and it doesn't mean we could, to Jonas's point, that we could avoid a total calamity, but we do have some breathing room. And by the way, with these central banks, the Bank of Japan has been buying stocks directly through ETFs. And guess what? Their market is getting hammered this year.
And even forcibly adjusting the rate on a 10-year note or their equivalent. Jonas, real fast, Donald Trump said in the debate that essentially this market is built on helium, a slight uptick on the Fed, and all of a sudden, kablooey. What do you make of that?
His real estate portfolio is built on more helium than the stock market. That's what I would say. With low rates, he owns properties that have debt behind them that are valued where they are.
But he's saying the stock market itself.
He is partially right, but it applies to all assets, not just the stock market. It applies to real estate more than the stock market, I would argue, because that's where you take the biggest hits because of the leverage. People don't buy stocks with leverage like that. It's not 1929 anymore.
That's what Rosengren, by the way, was afraid of. Rosengren is a dove who voted for the hike.
That's right.
In part because he says the biggest bubble we have is commercial real estate.
Yeah, that's right. Yeah.